Right now, something strange is happening in the silver market, and most people have no idea how serious it really is. While headlines are busy talking about stocks and crypto behind the scenes, big banks and major institutions are quietly facing a problem they don't want you to notice. Silver is getting harder to find, demand is exploding, and supply is not keeping up. This is not normal, and history tells us that when this happens, price moves don't stay small for long. So the big question is, are we about to see a real silver supply shock? Before we go deeper, if you want honest updates about silver, gold, and what the financial system is really doing, make sure you like this video and subscribe to Silvar Signal right now. It really helps the channel grow, and you won't miss what's coming next because things are getting interesting fast. Let's start with the basics, because this is where most people get confused. Silver is not just a shiny metal people buy for jewelry or coins. It is one of the most important industrial metals in the world. It is used in solar panels, electric vehicles, medical equipment, electronics, military tech, and even in water purification. Every smartphone, every computer, and every electric grid upgrade needs silver. And unlike gold, most silver gets used up and is not recycled easily. Once it's in a product, it's basically gone. Now here's where the problem begins. Global silver production has not been growing the way demand has. Mining takes years to plan, permit, and build. You can't just flip a switch and suddenly produce more silver. Many silver mines are actually byproducts of mining other metals like copper, lead, and zinc. So if those markets slow down, silver production also slows down, even if silver demand is rising. That creates a dangerous mismatch between how much silver the world needs and how much is actually coming out of the ground. At the same time, industrial demand is hitting record levels. Governments are pushing green energy, and solar power is one of the biggest users of silver. Electric vehicles need more silver than gas cars. Data centers, AI systems, and new tech all require silver for reliable connections. This is not a temporary trend. This is long-term structural demand that keeps growing year after year. Now let's talk about investment demand, because this is where things get really interesting. When people lose trust in the financial system, they move toward real assets. We've already seen strong demand for physical silver coins and bars. Dealers run out of stock, premiums go up, and delivery times get longer. That tells you something important. It means people are not just trading paper contracts. They want the real metal in their hands. But the real pressure point is not retail buyers like you and me. It's the massive futures market where silver is traded in huge volumes every day. Most of that trading is paper silver, not real metal. Banks sell contracts promising future delivery, but only a small percentage of those contracts ever result in physical silver changing hands. As long as everyone trusts the system, it works. But if too many people start asking for real delivery at the same time, the system gets stressed very quickly. And this is where banks start to panic quietly. If they don't have enough physical silver to meet delivery demands, they must either buy it at higher prices or try to convince traders to roll over contracts instead of taking delivery. That can keep the price controlled for a while, but it cannot last forever if physical shortages keep growing. We've already seen reports of declining inventories in major exchanges and vaults. When inventories drop while demand stays strong, that is a classic setup for a supply shock. A supply shock means prices don't rise slowly, they jump. Sellers hold back, buyers rush in, and suddenly everyone realizes that the metal is not as available as they thought. History shows us that silver moves fast when it finally breaks out. It doesn't give polite warnings. It stays quiet, builds pressure, and then moves hard in a short period of time. And usually, by the time mainstream media starts talking about it, most of the movie is already over. Another factor people ignore is geopolitical risk. Trade wars, sanctions, and political instability can disrupt mining operations and supply chains. Many silver-producing countries face economic and political challenges. If exports slow down or costs rise, production suffers even more. At the same time, governments and central banks are printing money at historic levels. That weakens currencies and pushes people toward hard assets like precious metals. So we have rising industrial demand, rising investment demand, limited mining growth, shrinking inventories, and increasing global uncertainty. That combination is extremely powerful. It doesn't guarantee exact timing, but it strongly suggests that the current balance is not sustainable. Now here's the part that really matters for regular people. When shortages become obvious, big players move first. Institutions, funds, and wealthy investors don't wait for news headlines. They position early. Retail investors usually arrive later when prices are already much higher. That's why understanding what's happening now is so important. Banks don't like volatility in metals they have large exposure to. They prefer stable prices and predictable markets. A sudden supply shock creates chaos, margin calls, and big losses for anyone caught on the wrong side of the trade. That's why you won't hear loud warnings from banks. They manage quietly, hedge quietly, and hope the public stays distracted. But markets don't care about hope. They care about supply and demand. And right now, that balance is tightening more than most people realize. Some people ask, why hasn't the price already exploded if shortages are real? The answer is simple. Paper markets can delay reality, but they cannot erase it. Price discovery eventually moves to the physical market. When physical metal becomes scarce, contracts lose credibility, and sellers demand higher prices to part with real silver. Think of it like a dam holding back water. Pressure builds slowly, quietly, and then one day it cracks. When it cracks, the release is fast and powerful. Silver has behaved like this many times in the past. This is why long-term investors watch inventory levels, industrial demand trends, and physical premiums, not just daily price charts. Short-term price moves can be manipulated, but long-term shortages cannot. Now, this is not financial advice, and everyone should do their own research, but understanding these dynamics helps you see beyond daily noise and social media hype. It helps you understand why big money is paying attention, even if they're not talking about it openly. And this is exactly why channels like Silver Signal exist, to cut through the confusion and focus on what really drives the market, not just headlines and hype. If you've been watching the financial system closely, you've probably noticed how fragile things feel lately. Rising debt, banking stress, currency weakness, and global tension all push investors towards safe havens. Silver sits in a unique position because it is both an industrial metal and a monetary metal. That gives it two powerful demand engines at the same time, which is rare. If industrial demand stays strong and investors continue to seek protection, supply pressure only increases. That's why many analysts believe that when silver finally breaks free from current price ranges, it won't move slowly. And remember, silver is a much smaller market compared to gold. It takes far less money to move silver prices significantly. That's why it tends to be more volatile, both up and down. But in shortage conditions, volatility usually favors higher prices. As we move forward, watch what happens with physical availability, dealer stock, delivery times, and exchange inventories. Those are the real signals, not just what price does in a single trading day. We are not saying banks are collapsing over silver tomorrow. What we are saying is that the system works only when trust remains high and physical demand remains manageable. When those conditions change, things can shift very quickly. And that's why this moment matters. Not because of fear, but because of opportunity and awareness. Being informed before major moves happen gives you choices. Being informed after usually means reacting emotionally, and that rarely leads to good decisions. If you've made it this far in the video, you already understand more than most people about what's really happening in the silver market right now, and I really appreciate you staying with me, because watch time like this helps this channel reach more people who want real information, not noise. Before we wrap up, I want to hear from you. Do you think a real silver supply shock is coming, or do you think the system can keep things under control for much longer? Drop your thoughts in the comments, because your opinions help shape future videos and create real discussion here. And if you found this useful, share this video with someone who cares about investing, inflation, or protecting their savings. Most people never look at silver until it's already making headlines. Sharing now could help someone see what's coming before it. It's too late to act calmly and logically. Don't forget to like the video, subscribe to Silver Signal, and stay tuned, because the next few months in the metals market could be very different from what we've seen for a long time. Thanks for watching, and I'll see you in the next one.